Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, October the 6th, and just wanted to take just a brief moment as we wrapped up September, as it was the worst month that we've seen in equity markets since March of 2020. Glad to have that page behind us. We'll discuss what went into that, where markets finished last week, and where we see markets moving from here, and what we're seeing so far in the market action this week. So last week, the S&P 500 was down again, down 2.91% to end the third quarter. The mid-cap index, as measured by the S&P 400, was down much less, down 1.3%. And the small cap index, as measured by the S&P 600, was down 1.1%. So both small and mid outperforming large last week, as we are still dealing with the effects of the over-aggressive Fed and rates rising very extremely, especially on the short end. And that puts a cap onto equity markets and to stocks and the stocks in general. As you have rates continuing to rise, that's going to put a ceiling on where the equity market can go for the short term. So we entered in this week, everybody was downtrodden. We were very much in oversold conditions entering into this week. And Monday and Tuesday this week were the two best days in the equity market consecutively that we've seen since April of 2020. So coming off of the worst month since March of 2020, we followed up with the best days since April of 2020. And then Wednesday and today, you can see what was encouraging yesterday is we were down 400 points on the Dow at the low, and we were positive for a good portion of the day and finished just slightly negative. So a nice recovery throughout the day, and looks like we're trying to put in some type of a bottom here, and wanted to speak a little bit about that, as no one rings a bell and no one tells investors that the bottom is in. It's part of investing is you're taking your best educated guess on when is there the right opportunity and when is there enough bargains for me to say I want to buy this at that price. Well, as we've entered into this week, you could look at a myriad of list of names of find wonderful companies down 30, 40, 50, and 60% on the year. Now, are they going to go back to those numbers, that some of them that were pie in the sky numbers to begin with at the beginning of this year? No, not necessarily. But if you have as an investor, a time horizon, knowing that investing, it does take time, and if you're just looking at 1 year into the future, do you believe that the prospects overall for this equity or this company are going to be better or worse off than they are today? And is all the bad news priced into this stock? Where else can it go from here? And so we would, River Place, believe that from what we are seeing from our technical analysis to the overall market action to the bargains that exist out there is, it's never a bad time to go ahead right now and start scaling in. We're not calling a bottom. No one can call a bottom till months after we've realized that, and we realize we're not going back down to those levels. No one who tells you that they know exactly when it is, they got lucky. So it's important in these down markets and in bear markets, if you have losing positions that you don't feel great about the optimism moving forward, whether it's because of what the economy is telling you its prospects aren't good for, or you just want to exit the position because you can find more opportunity elsewhere, go ahead, book some losses. We talked about this back in the spring as how to navigate through a bear market. Well, we're in a bear market. We've been in one since essentially November of last year. And the S&P 500, and so you look out with that time horizon of a year, you book some losses today, or if you have extra cash available, you can go ahead and put that into work now. We really believe that because our money flow analysis that we're seeing is very strong. At River Place, we are going bargain hunting as we speak. We had some dry powder, or cash as we like to say, sitting on the sidelines, and we put that money back to work in some great opportunities because some of these stocks have just come down to just tremendously great buying opportunities. Levels that we haven't seen in years out of some of these equities that make a great time to enter into the marketplace. So could they go down another couple percent from here? Absolutely. But investing is all about optimism for the future and future prospects. So when you're making that purchase, do you believe that the optimism for that going up outweighs the potential for it to go bad? Obviously, there's fundamental analysis and all of that goes into purchasing an equity in a stock as well. Don't just go find what's down 80% and buy that. You need to look at all of the analysis and the fundamental analysis that goes into that too. But as always, if you have questions about how to navigate this market, if you're thinking about dipping your toe into the market now, or feeling a little bit more comfortable about the prospects and want help on how to navigate that, feel free to give us a call. We'll be happy to help you through that. You can reach us at 904-346-3460. Or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thank you so much.